The story of how the modern stock market was born is much more dramatic, accidental, and surprising than most people realize. And it begins not in New York or London, but in the narrow canals and busy harbors of 1600s Amsterdam, where merchants, sailors, bankers, and traders formed the beating heart of the world's most advanced economic system. In the early 17th century, Europe was obsessed with the East, especially with spices like pepper, nutmeg, cinnamon, and cloves, which were more valuable than gold. A single ship returning from Asia with a full cargo could make its owners wealthy for life, but the journey itself was unbelievably dangerous. Voyages took 18 to 24 months, passing through violent storms, pirates, disease, and unpredictable political conflicts. Ships sank so frequently that merchants referred to them as floating coffins, and the financial risk was so extreme that a single lost journey could bankrupt even the wealthiest investors. To solve this problem, Dutch merchants in several cities came together to form a new kind of company, one that could spread risk among many people instead of depending on one or two rich backers. This idea led to the birth of the Dutch East India Company, known as the VOC, founded in 1602. What made the VOC revolutionary was its decision to raise money by selling shares pieces of ownership to the public. More than 1,100 people across the Netherlands bought VOC shares in its first year, according to verified historical records preserved in the Amsterdam Municipal Archives. This was the first time in human history that ordinary citizens could invest in a global trading enterprise without sailing themselves or owning a ship. Investors would profit together, and losses would be shared. It was a radical solution to a real economic problem, and it set in motion a chain of events that would eventually create the modern stock market. Among those early investors was Isaac Maire, a Belgian-born merchant who had escaped religious conflict in his homeland and moved to the Netherlands, where he built one of the strongest reputations of any trader of his era. Maire understood the complex world of international trade better than almost anyone, and he quickly became one of the largest shareholders in the VOC. But he was also a sharp critic of the company's leadership, believing they mismanaged money, hid financial troubles, and made decisions that harmed shareholders. This tension between him and the VOC directors would eventually lead him to take actions that changed finance forever. After VOC shares were sold, investors began to realize something. They did not want to wait 20 or more years to receive profits. They wanted the ability to sell their shares early, either to secure gains or to reduce risk. But the VOC had no mechanism for this. There were no official trading rules, no transaction systems, and no dedicated exchange. As a result, shareholders began meeting informally in taverns, private houses, street corners, and busy markets to negotiate deals. Prices changed constantly based on rumors, ship arrivals, wars, or weather conditions. If someone claimed that a ship was spotted near the Cape of Good Hope, share prices would rise. If a rumor suggested a ship sank, prices would fall sharply. This chaotic, rumor-driven environment marked the earliest stage of stock trading. People were buying and selling pieces of a company long before anyone built the systems required to manage such behavior. And this lack of structure created both incredible opportunities and huge risks. Isaac Maire observed this chaos and used it to try something completely new, something that no one had ever documented before. In 1609, convinced that VOC shares were overpriced, he began to sell shares he did not actually own. In today's financial language, this is called short selling. Maire borrowed shares, sold them at a high price, and planned to buy them back later at a lower price, returning them to their owners and keeping the difference as profit. His prediction was simple. VOC share prices would fall, and he wanted to make money from that decline. While this is a common practice in modern financial markets, at the time, it was shocking. The VOC leadership accused him of trying to sabotage the company, and after intense disputes, the Dutch government banned him from trading VOC shares. But by then, the impact of his actions was irreversible. He had introduced a concept that forced the financial world to create rules, regulations, and trading systems. Short selling became a core component of global markets, used by hedge funds, traders, and institutions worldwide, all stemming from Maire's early experiments. As trading increased, Amsterdam recognized the need for an organized marketplace. The city built a large open structure known as the Amsterdam Stock Exchange, widely considered the world's first formal stock exchange. Here, buyers and sellers could meet every day, share real-time information, negotiate prices, and record contracts. Historical records show detailed price lists, dispute resolutions, and even early versions of broker systems, all created to bring order to the previously chaotic world of share trading. Traders shouted offers, reacted instantly to global news, and developed strategies to predict market movements. Many were not sailors or merchants, but purely financial speculators, analyzing shipping routes, weather patterns, political alliances, and economic reports. They tried to anticipate price changes before anyone else, a behavior that remains central to trading today. Amsterdam quickly became the financial center of Europe, influencing London, Paris, Hamburg, and eventually New York. The VOC's success proved that public investment could fund massive global enterprises, transforming how nations, companies, and individuals created and distributed wealth. The VOC was not only the first publicly traded company, but also the most valuable company in world history when adjusting for inflation. Some estimates suggest that during its peak, the VOC's value exceeded $7 trillion in modern terms. Its success attracted more investors, encouraged saving, and helped build a new middle class in the Netherlands. The country became known not just for trade, but for finance, insurance, banking, and record-keeping. Innovations like transferable shares, public ledgers, limited liability, and structured trading were all pioneered in this era. Every major financial system in the world today, whether in Tokyo, London, Hong Kong, or New York, still uses variations of systems invented in Amsterdam in the early 1600s. Meanwhile, Isaac Maire continued to influence history in unexpected ways. After being banned from VOC trading, he did not disappear. Instead, he formed a competing company, attempted to find alternate routes to Asia, and funded voyages of exploration. His son, Jacob Maire, later circled the globe and helped discover Cape Horn, named after the Dutch town of Hoorn. But despite these achievements, Isaac's biggest legacy remains the financial revolution he unintentionally triggered. His frustration with VOC leadership, combined with his desire to protect his investments, led him to invent financial strategies that the world still uses centuries later. His actions accelerated the formalization of stock markets, pushed governments to regulate trading, and shaped the early legal structures of modern capitalism. By the middle of the 17th century, Amsterdam's financial ecosystem resembled a modern market more than a medieval trading system. Traders used credit, leveraged contracts, written agreements, and even early versions of options and futures. Government bonds began trading, commodity markets expanded, and merchants insured ships and cargoes, creating the foundations of global insurance. The stock market became not just a place for wealthy elites, but a powerful engine for economic growth and innovation. Ordinary citizens could invest in ships, companies, and ventures, earning income without leaving their homes. The concept of passive investment began here, long before the term existed. The world's financial future was unlocked by a mixture of necessity, innovation, conflict, and opportunity. What makes this story remarkable is that none of the people involved understood the scale of what they were creating. The VOC did not expect its share sale idea to inspire global financial markets. The Dutch government did not expect Amsterdam to become a global financial capital. And Isaac Maire certainly did not expect his controversial trading strategies to shape markets for centuries. Yet, every time someone buys a stock, checks a price, reads market news, or invests through an app, they are participating in a system born from the decisions, mistakes, and innovations of merchants in 1600s Amsterdam. The stock market was not invented in a single moment. It evolved through pressure, curiosity, conflict, and necessity. And at the center of that evolution was a Dutch trader who simply wanted to solve his own problems, unaware that he was building the blueprint for a financial system that would one day connect the entire world.